Hi, Jonathan York, Bay Financial Partners, looking at investment markets. A little bit of a nervous time out there in the US market. We saw the Fed increase interest rates. The data since then has been a little bit on the sort of soft side, a little bit mixed. Durable goods were a little bit softer, and now probably just waiting to see how those sort of GDP readings come through after what was really a pretty soft first quarter. But overall, certainly if you look at on the employment side, US employment is still very strong. Unemployment is down way below sort of 4.5%, and certainly most people would view that as full employment. And certainly on the markets, they're still looking for a further, at least one further rate increase from the US before year end. Interesting note as well, the IMF have downgraded US growth, brought it down to 2.1 from 2.3. It's only a little bit, but again, it's sort of all pointing towards it. President Trump's numbers possibly don't stack up in their eyes, and it's just going to be pretty tough to keep those sort of growth targets going forward. Interesting as well to see that oil has sort of come back a little bit from its lows. Certainly got a bit of a pounding as maybe some of the nervous longs are sort of shaken out of the market. But actually seen a little bit of a spike in the last sort of couple of days, and probably going to look to sort of trade that sort of 42 to 46 sort of range, with maybe a little bit of a push on the upside, possibly to 50. It's interesting, most analysts, economists are still forecasting a year-end price of oil of $50. But again, on the flip side, what is interesting is that the rig count in the US was up for the 23rd week. That's a new record, and that's just the number of rigs that are sort of coming online. Europe's still showing some pretty reasonable signs of growth as head into the Northern Hemisphere summer, and it's just going to be interesting to see how that sort of pans through over the next sort of 2 to 3 months. UK is still a bit of a mess. Finally got a government in place now. Brexit negotiations have started, but really the UK already seems to be on the back foot. And really, I think it's going to be some pretty tough negotiating over the next sort of 12 to 18 months. Consequences of that for the UK economy, really do look a little bit negative. It's going to be pretty tough, I think, say over the next sort of 12 to 18 months. But then potentially, with the currency allowed to sort of fall and come down to a more sort of realistic level, you should see a little bit of recovery coming through. New Zealand again, sort of steady growth. It's pushing through at a reasonable rate. And potentially you've got a further boost now coming through over the next sort of 2 to 3 years at least. With the Team New Zealand winning the America's Cup, look like hosting that in sort of 4 years' time. That'll be a further boost to the economy. Really should stand New Zealand in pretty good stead. Again, New Zealand looking for income options. Call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. We look forward to speaking to you soon.